Welcome to Leverage. I have Ari Ditkofsky with me today from Dominion Lending. We were just saying actually how no one's talking about interest rates, but everyone's talking about interest rates still. So I'm really excited to have you on. And we just actually did the episode before we even started. So we talked about everything already. But yeah, welcome to the show. Thanks.
Thank you for having me.
Yeah,
Thank
for
you all.
Sure.
Yeah.
So I know you told me a little bit about how you got into it, but give us maybe a quick bio on what your background is and how you got into mortgages.
Okay, so I am a entrepreneur my whole life through and through. I have had the good fortune of starting a business in the United States. Ironically, I launched during the last recession in 2008. I was fortunate that business got acquired in late 2016. And from there, I actually became a lender, a private lender, and mortgage brokers were bringing deals to me. And I kind of felt that I was unimpressed with the level of service that they were delivering, communication. And I said, what does it take to be one of these guys? So fast forward 5 years and won a couple awards along the way. And enjoying every minute of it.
Awesome. Yeah, very cool story, but we'll leave that for another podcast for sure. So we just saw the largest interest rate hike ever in history, if I'm correct, in the shortest period of time.
Pretty quick.
And what I would love to understand from you, doing it every single day, is what are you seeing the biggest change? We saw, and we were just talking about this, I've said it on the show before. Our mutual friend Adam makes fun of me. I'm a variable girl. I love variable. I've always loved variable, not loving variable so much anymore. But, everybody was going out and getting a variable rate. Money was free. Money's really expensive now. So what are you seeing out there?
So, throw you for a loop, huh? So they told us they were going to keep rates low for such a long time. And given that we had no reason to doubt our government, a lot of people saw a huge discount.
Should, play the video now of the Bank of Canada saying we are not going to raise rates.
Cut to that scene.
Yeah.
And they said they're not going to raise rates for such a long time. So usually central banks, they don't telegraph their plays like that. So when people are hearing this, they're saying, well, there's a huge discount from the fixed to the variable. I mean, money was, as you said, virtually free. And so people were able to qualify for wherever they want. It became the Wild West. Every single house was going for multiple offers, bidding wars, no conditions, everything. And now we're not necessarily seeing that as much. Mm-hmm. We're seeing it come back a little bit now in the nicer season, I think, right? But not nearly the same volume in the same way.
No, and I think that's kind of what we were talking about before is I think that people are really struggling to understand their way, right? So going back, it was money was free. Mm-hmm. You got a variable rate because that was the cheapest. We had the Bank of Canada saying, we're not going to raise your rates. You can afford to do this. Go for it. Enjoy. Spend. And so there's no, no one has the confidence to really understand. I mean, now even they say, they're we're not really going to raise the rates. And then they raise them again. So no confidence there. Money's expensive. As you said, they're qualifying for less. Yes. So that's now trickling down to people who are do I want to sell? What do I want to do? I don't know. Forget the rate. I don't even actually know what I should do. Should I sell now? Is it I have so many people that I know who will come up to me and they're like, how's the market? And I'm like, great. And it is.
Well, people are feeling pressure. I mean, there's all the people who are in variables who have had to feel the pain of seeing their payment change dramatically and quite quickly. And so a lot of people have been hanging on. Keep in mind, when you do have a variable, you have the right to switch to a fixed at any time.
Right.
The problem is that people feel a little bit mind screwed, so to say, because they're saying, well, do I want to fix it now? Because people still look at rates today, obviously, versus what they were as high. Now, you and I both know that where they are today historically is not high. This is the average, maybe even less than the average historically. But considering we've been so spoiled for the better part of almost 2 decades, people have really come to believe that this is high and that the norm should be 2-3%, which I don't think is going to be, I think we were in a golden window that one day we'll look back on and say, I can't believe we were getting this. Yeah. And I think that people are just going to have to adjust to the new normal, which is potentially where we are now.
I just want to touch on one thing because I think a lot of people actually don't know this is the difference between having a fixed and a variable is switching out. So if you are in a fixed, I don't know what the calculation is, but it can be a huge penalty. Like, so even if you sell your house and you don't buy another one, the bank is not happy with you, right? Whereas in a variable, I think it's the interest on 3 months worth.
Yes. So anytime you break a variable, it's always 3 months of interest, not 3 months of your payment,
Right.
but 3 months of just interest from your payment.
Right. So it can be a couple $1,000s, it could be a couple $100, very
Well, depending on how
manageable.
big your mortgage is, it could also be quite a bit.
Yes, fair.
But compared to the fixed, which more often than not is what's called an IRD, an interest rate differential penalty. And what that is, and I'm just going to try and like paraphrase, but the banks are basically going to look at your rate and not the rate that you got either, because the banks are very tricky. People don't know this. But if you get a rate offered to you by a bank today and you say, hey, I want to buy a house, and they're going to say, okay, here's the rate. If you go to their website, you're going to see a much higher rate than what they told you. Totally. Okay. And so what the bank is going to do is that if you break that penalty, they're going to say, hey, look, now today you're breaking it, it's 4%. But if you look back at the time of when you got into that contract with us, it's not the discounted rate we're going to calculate. We're going to calculate the rate that was posted, the posted rate. So now what they're going to say is, well, if there's the rate today is 4% and what it should have been when you got your mortgage was 7%, then we're really losing out on 3%. Multiply that by the balance remaining on your mortgage for the period of time, and there's your penalty. And it could be significant.
Huge.
So yes, that's what keeps people beholden to the bank. A lot of times then they don't move. And that actually is part of what I do as a living. Great segue there, because I'm constantly looking to calculate for my clients what their penalty is. They can call me anytime, or I'll reach out to them saying, I've already calculated your penalty, and it may make sense for us to break when it's favorable to the client.
Right.
And then we go, and the client could actually be pocketing thousands of dollars per year. Okay. But if you think about it counterintuitively, the bank's never calling you saying, hey, by the way, you should take a penalty today and leave us to go somewhere else because it's financially advantageous to you. Right.
They were though when the rates were going down.
They had to. Somebody else was going to eat their lunch for them.
Oh yeah, it was a wild west for sure. And interestingly enough, it kind of actually answers my question. But we were just also talking about, and I've said this before in the podcast. It depends, who you're working with. But you need to be in good hands because, as you just said, the banks, it's a bit, I think people forget banks are businesses. Like they think, they're almost like a government institution. They're not. They are in the business of making money by lending you money, by taking your money. It doesn't matter. So there are tricky things that they do for sure. And the average person does not know them. So for example, we were just talking about, you walk into a bank, and it's happened to me, by the way. Like I'm in this business and I had to go renegotiate something. And I said, okay, can you send me a variable and the variable rate and the 1 year fixed. Okay. And she goes, oh, no, that's not going to be very good. I'll send you the 3 year. And I'm like, am I speaking English? I'm like, I don't want that.
Well, because she wanted to show you a rate, which she figures will sell you. Whatever for her they perceive that a customer or client, all they see is a rate. So what she doesn't want to do is she doesn't want to show you 1 year if the 3 year looks cheaper. She wants to sell you on a rate. She's not going to sell you on what makes sense for you financially or your goals.
No. Or what's going on in the world or like so, but I also know that they love their 5 year fixed. Like that's their bread and butter. I mean, can we say that that's what the banks make most of their money off of?
Yes and no. I would say yes because it's the most commonly taken product, but it's also most commonly taken because people would rather lock in for a period of time when they're in a comfortable situation, right? Because if somebody says that they want to be in a 1 year or a 2 year or a 3 year, I need to understand why. What are you looking for? Right? Well, I think the rate is going to go down. I think the rate is going to go up. That's fine. I mean, listen, the client is the client and they need to make the decision that's best for them. My job is to help guide and understand what their objectives are and help them be put in a good financial situation. Right. But that being said, it's really taken because it's the most common product, not because it makes the bank the most money, but usually people don't want to be rinsing and repeating and doing an appraisal year after year unless they have an objective. Somebody could say, hey, look, I'm going to be renovating my house and selling it in a year. Then I wouldn't want to put them in a longer product where they can have a penalty, right? Maybe we look at a variable or a line of credit instead, whatever puts them in the best situation based on their goal.
It's so interesting. I mean, I still, even though I do this every day, I still have my jury of one. You know, I'm like, oh, that makes sense. Whereas like I wouldn't care, right? I'd be like, okay, I'd rather renegotiate and make sure that it's done properly. Sure. But I get that. That's why people, yes, get stuck on a horrible Rogers contract or something for the rest of their lives.
Well, the funny thing about that is people are more accustomed to renegotiating their Rogers contract. How many times do people call Rogers and, tell them, oh, I'm thinking about going to Bell, and Rogers gives them off $20 a month, but they don't think for their greatest debt to do that with their mortgage because they don't know how to. And when they do go to the bank, given the fact that they've already put so much blind faith and trust into the bank being financial advisors, right? I'm doing the quotation thing with my fingers for the people who are listening.
No, but it's actually not okay that they do that. Like, they're actually not certified financial advisors.
They shouldn't even have that title. But people believe that they're getting financial advice. Like, let me financially advise you to take this product offered by this bank, right? Like one bank.
Anytime anyone ever tells me that they're financial advisors at the bank, I'm like, I'm like, oh my God, what?
It's all perception. I mean, listen, that's sales in the first place. Perception is reality. Yeah. So at the end of the day, the bank needs to put out that image, and they take full advantage of doing that. And somehow as consumers, we're the ones that create the narrative. It's an ego play for us. People walk in. I have clients call me all the time. I'm private wealth with this bank. I'm private wealth with a specific bank too, but that doesn't matter. They're not calling me to say, hey, listen, some other bank is performing better than us. We should get you over there. Yeah. You don't get that. It's really just an ego stroke to say, hey, I'm with this and I'm getting a high level of service. So you're selling yourself on why you should go into this dead end with this one bank that will just keep you in the dark forever. Right? As long as they have your business, which is what their interest is.
I also, going back to like the variable fixed also, I think that's what you were saying. Like, I think it's, I've asked people, again, I don't like commitment. So I like a variable. If I need to move something, if whatever it is, I prefer it. And even like back when money was free, I had clients buying and they'd be like, oh my God, I just got this great like 3% fixed rate. And I'm like, what? I'm like, why are you going fixed? I don't understand. And they were like, oh no, we prefer it. Like there's no risk. It's that risk tolerance. We were talking about that. Like there's no, like the people, everyone has their own risk tolerance. We saw it through the pandemic, all that stuff. And I think that there are people who just really prefer it and sleep better at night, knowing that their mortgage is not going to go up, right?
And that's a part of the process that I go through with them to figure out what are they most comfortable with. And starting from, people come all the time, what's the max I can borrow? And I say, okay, we'll figure that out, but let's also figure out, are you comfortable with this monthly expense? Factor in all these other variables like your property tax, maybe your condo fee, your utilities, and all your other living costs, right?
Yeah. And it comes down to, like, I work with clients who will say, oh, I went to the bank and I got approved for $1 million, but I don't want to spend that. I just 800. That's it. Like, and again, I think it's a matter of, like, we were talking, you can have two people, two households, same income, same kids, same situation, and one is going to do something very different than the other. Right. And that person who said, I'm not going over 800 is not even looking at their monthly, expense. They're looking at the $700,000 mortgage they've got, right? That keeps them up at night. Whereas someone else may come to you and be like, what's the maximum amount I can get?
Right. But the real estate transaction is so funny because it's an emotional, it's an impulsive, it's a milestone in people's lives. But just like a wedding, it's a slippery slope. Everybody comes in. I have clients that will call me. I'll get them pre-approved. They'll say, Ari, we're probably looking to buy in the next 7 or 8 months. We're in no rush. And I say, not a problem. I mean, for me, it's
that's my favorite.
Whenever you buy,
no
you buy.
Rush.
I work with clients for 2 years. That same couple is calling me back 6 days later saying, Ari, we need to know our max. We're going in firm. We just found the place. And I'm like, okay, no problem.
I love that when clients are like, we're not in a rush. And I'm like, okay.
Right.
No problem. And then like 3 seconds later, how's Sigma?
Exactly.
And I'm like, no, listen. And I always say, like, you should move. Like, they're like, is this a good time? Mm-hmm. And I'm like, you know what a good time is? When you're ready.
That's right.
I'm like, don't play the house. The house, Vegas will always win.
Right.
Do not try the market no, move when you're ready, because all the other emotional costs and, your kids and school and whatever, that's worth something to you in your life. Yeah. So if you move twice, I'm not even talking about like the monetary, like you have to pay for the movers twice, forget that. But the actual, like when you're in the mindset, do it. Who cares what's going on in the market? Yeah. Are you staying in your house for 20 years? Is it your forever house? Who cares what's happening right now, right?
The things that people think when they're going into this, we're all guilty of it. We overcomplicate things. Like we're thinking about beating the market. Am I getting the best deal in the house? All these other things. And what I always try to say to them, I say, guys, enjoy the process. Like enjoy this process. Don't let it stress you out. Don't think about of course you want to get a great rate. You want to get a great package. It's not just the rate. But as long as you're in a comfortable position, focus on your lifestyle. This is your house. This is the roof over your children's heads. This is the neighborhood. This is everything that you want to have. And sometimes, I'm sure you have to deal with this all the time, listen, I get clients calling me back where they're stuck on the final $5,000. I said, guys, you're offering $1.8 million on this. You're offering $2 million something.
Like if you do
I don't discount money. Like everybody should feel comfortable.
No,
but I mean, you've come this far and you're saying it hits all the boxes you want to make your dream house come true. And now we're talking about $5,000. But this is what happens. It's an emotional process for people.
Yeah. And some things happened in real estate where everybody wants to be able to have that story. That they didn't give the $5,000 up, right? I think that
they need a win.
They need and listen, I've said this before. In my side of the business, if I have a competent, great agent on the other side, it's done. Everybody will win. Everyone will win because there'll be that conversation. You've got a relationship with your clients. You're advising them. They're listening. It's a team effort. We're all in it together. There's no one screwing anybody else, right? But everyone's got a story. Everyone's heard a story. Their cousin, they're this, they bought a house. Oh, they only paid this much. At the end of the day, I will tell you something. If anyone tells you a story, assume it's not true. Yeah. They're not lying to you. They've just got pieces of it wrong. Right? That number they're giving you may be a little bit off.
So much broken telephone in this industry. And I have to deal with that all the time because people speak in broad terms. They say, oh, my friend got this rate. I heard this person got this rate. And I have to explain to somebody, okay, that rate, I can tell you just what you're telling me right now is an insured mortgage rate. That does not apply to a $3 million purchase, okay? But people only speak in terms of rates. Or the same thing, like a lot of people get advice from their family and friends. They have to get everybody's opinion. They come back, oh, I should only get fixed. Okay, well, why? And that's totally fine because I want to understand, what do you know about the product and why do you want that product?
Well, you can't guide them.
Well, otherwise. My mom and dad told me that that's what they've always done. I said, okay, not a problem. So did they explain to you why and how does that meet your current objectives? And a lot of times that might be the product we put them in. That might be the right product for them. But a lot of times it's just whatever they've heard from the grapevine.
It's very true. Yeah. And I think people just want to, and again, like going back to how we started this whole conversation, I think people also want to know what the right decision is. Right. I truly will tell you, there are a lot of people who are like, adulting's not so easy for them. Mm-hmm. You know what I mean? So you and I, maybe personalities, very decisive, make decisions. There are a lot of people who aren't, and they're not good at making decisions, and they doubt themselves. Yes. And so they want to know they did the right thing, that they didn't mess up.
Or at least have that validation from the people they keep closest to.
For sure. Yes. For sure. And I love your approach of like, not just having a client say, well, we want fixed. And you go, okay, great. So here are my No, clients also are like, yeah, okay, we definitely want to buy before we sell. Okay, great, no problem. How come? Right. Talk to me about why that is, right? Like whatever it is, I think is so important for us to understand why someone wants to do it, because it could dispel a myth. They could be like, oh, because this, that, or whatever. You'd be like, oh, you know what? Let's talk about that, because I'm not sure that's necessarily true anymore. Right. It could have been when your parents got fixed rates. That's not true anymore.
Right. Well, this is why... if I had to say, if somebody were to ask me and they were to say, what is the most important thing to you and how you run your business, I would say I overeducate the client. Because if the client is overeducated, then they are ultimately going to be comfortable at all times, because knowledge is power. Power is comfort, right? And when they know everything that they need to know, there's no question marks. There's no uncertainty, because if there's one thing that people always kind of feel in the backs of their mind, it's that they don't have all the information. Yeah. And when they feel like that, that leaves question marks. Where you do have question marks, you do have uncertainty. And from us just talking about the team effort and everybody working towards the finish line as a united team, they can't do that if they can't close on a transaction confidently with their realtor if they don't feel absolutely certain about their situation. So for me, it's the most important thing that they're overeducated. And that's why I ask them these questions. Why do you want that? The more they tell me, the more I understand about them. And this way we can figure it out, not just their affordability and their comfort. What are their goals? Why do they want this product? And then it's really like a smooth trip for everybody rather than a stressful one.
And the team effort part, and I talked about this with Joel Kadish, who comes on, the lawyer. It makes me crazy when I speak to the agent on the other side and they have no contact with a mortgage agent on the other side. They're like, yeah, no, they're good. They told me they're good.
Mm-hmm. No, what? I don't like that. Yeah.
Right? Like there needs to be a whole team effort where we're sending you listings. Mm-hmm. See any issues with this at all? What if this, we just talked about a very complicated deal that I was dealing with. If I hadn't been dealing with their mortgage broker through the whole process, there could have been massive problems. Right. And I think that's something that people don't insist on from the team that's working on it. And I think, by the way, that, a lot of times I'll ask, like, do you have a mortgage lawyer? Like after the fact, and they're like, no, do you have one? And I'm like, see, this I ask at the beginning because that needs to happen beforehand. Right. So first time buyers, I feel like I know in my head what like the biggest shock to them is when they unveil this fact. But what would you say is the biggest like mistake, or what do you see when you
biggest mistake?
Yeah, when you look at first time buyers and you talk to them, not a mistake, like whether it, let's go with mistake.
I would say we basically touched on it for most of our chat. I think that it's kind of two parts. It's one, just being rate oriented. And you actually said something earlier. You said, you were talking about casinos. You said the house always wins. Okay. So let me just utilize that for a second, because when it comes to rates, the house always wins. And what I mean and what I try to teach people is there's a lot of casinos out there, but they don't all have the same one owner, right? Yet somehow all these casinos benefit from the customers who walk through their doors playing by the exact same rules. Now, how do I relate that to banks? Banks don't have the same owner. They're all these competing interests, just like the casinos. Right. But the house always wins because they train us to learn what we know about mortgages. They have conditioned people to look for one item only when they look for a mortgage, a rate. People don't know about terms. People don't know about amortization. Right. Yeah. People don't even know about amortization or how that affects their cash flow. I just today, prior to coming in here, had a TD employee call me to do their mortgage. And they're saying, oh, I get a staff rate and this. And I said, okay, that's great. But they didn't even know what the amortization was. And the banks are trained to do that. They just tell you a rate. And then you say, wow, that's great. I got this rate. Okay. But they don't even know that, for example, if they move to a 30-year amortization, that meets their financial needs and was, for this person, was like $600 less a month, even though it was a higher rate. So if I would have said to them, hey, your rate's $4.99, and they say, yeah, my bank is offering me $4.79, okay? 99.999% of people are going to say, I'm taking the $4.79. That's way better. They didn't realize that the $4.99 was $600 less a month. Now, somebody might say, yeah, but it's 30 years amortization. You're paying interest for longer. Sure. But when you're just starting out and you're getting into your first home and you don't know about the cost of home ownership and you want to make sure that you have cash flow and you don't have a gun to your head financially, you can always elect, when you get a mortgage, you get prepayment privileges. You can always elect to pay it down quicker. Okay, but you can't slow it down without that penalty. So therefore, I would elect all day for people at their own discretion to take better cash flow. Mm-hmm. And if you're burning a hole in your pocket and saving a ton of money, which I'd rather you be in that position, put it towards your mortgage and you can pay it down quicker than a 25-year AM if you wanted to.
By the way, I don't think people actually know that. I don't know if people actually know that. So you'll go in and the bank will say to you, okay, you qualify for this, or you go to your mortgage broker and these are your monthly payments. That's just the minimum that they need you to pay so that, the numbers make sense. But if you're, your monthly cost is $5,000 and you've got $10,000, you just call your bank and say, you can do it online.
You can do it online. You could put it towards your mortgage.
Whatever you want, then put it back down if you need the cash flow, you want to do a renovation, whatever it is.
Exactly. So I'd rather have people have that flexibility because yes, when you do take advantage of your prepayment privileges, and it comes with every bank and every mortgage, the amount varies though per bank due to the bank's policies. But when you do that, all of that money goes to principal. Nothing goes to interest.
Right.
So if you were paying that $5,000 a month and all of a sudden you say, you know what, this month I just got a bonus. I'm going to throw another $5,000 on my mortgage. Totally. Okay, well your mortgage balance just dropped by $5,000. None of that extra money went to interest. But now you've just expedited the pay down of your mortgage and changed how quickly that knocked off a significant amount of time of you paying down your mortgage. So what I would rather do.
And it's not stuck there either.
Exactly. I'd rather have people get into that situation rather than do it the other way around, which is to do like a faster amortization and it's costing them more a month. And now they're having shock at the cost of managing a house, upkeep, maintenance, insurance, all these other things, and they can't keep up. And now you have a gun to your head with nowhere to turn other than taking a penalty and breaking your mortgage.
Yeah, it's I was actually really surprised that was something, because I think, again, going back to how the banks condition us, they're like, okay, we're going to here are the rates, shiny objects, right? Here's the sizzle. And you get lured in. You're like, okay, I took the low and here's my payment. And you're like, oh, that's amazing. Okay, I'll just keep paying them more interest. I mean, especially if you're in sales, like if you're someone who's like, has a big bonus at the end of the year or whatever, cash flow, it's a great way to manage that.
Absolutely. And I'll tell you something. It's kind of funny because people can't help themselves. It's human nature. It's penny wise and pound foolish. And so why banks play this game is because more often than not, some people don't even know about the existence of a mortgage broker. Okay. But people
Before I got into real estate, I had no idea, right? You walk into the bank, you went to the bank that your parents went to.
Or that you have your bank account with.
Yeah.
So banks are just benefiting by you literally catering your business to them, just dumping it in their lap and assuming that they, as financial managers, again, I'm doing the thing with my finger for people who are watching, but they are giving you, taking care of you, okay? And so what happens is the banks understand that more often than not, people are going to go bank to bank to bank to bank to bank. The first bank's going to say, I'm going to give you 5%. The second bank says, I'll give you 4.99. The third, 4.98. And the last, 4.97. And you tell yourself, oh my God, see, I did it all myself. Look at all the hard work I've done. And I got the best rate. I got 4.97 and I started at 5. Okay, well, the difference between the 5 and the 4.97 on $1 million is $300 a year. And it becomes obviously a little less because your balance goes down from year to year. But let's assume it was all the same and it was $300 a year. So you just saved $1,500 if you did a 5-year deal, okay? What I do for a living by breaking people out is, and people take that, they go, oh my God, best rate. What I do is I call them when I say, hey, listen, Rachel, it's going to cost us like $6,000 to break your mortgage, but we have another 3 years left and we're saving $28,000. So you're netting 22 over the remaining 3 years. I mean, you're saving over $7,000 a year, but some people got so excited that they took the $300 a year. Do you know what I mean? Instead of $7,000 and because they don't trust the process. Like I said, penny wise and pound foolish. They would rather take $1 in their hand today than think about potential grand savings that they can have later.
I agree with you, but I also believe it's because they trust the banks. Because
That's
they're
right.
like, the bank said to do this,
Yes.
and you're not a bank. You're a mortgage broker. I'm not sure if I should be listening to you because the bank told me. And I think that that's just the really fascinating thing to me. And listen,
and that's the other mistake. That's the other part of the two parts of that.
And I do believe to a certain extent it's very similar to realtors in that, there are, like you said, there's very good ones. And there's a reason why 90% of that business is done by 10% of the realtors. Right. But there's a lot of really bad ones. Yeah. And so there is that element of like trust, right? Do we go to a bank? Or do we go to Dominion Lending?
Right. Yeah. And that's really what it is. It's you only get one shot at it. So going back to even the overeducating, that's how I would insert trust. Yeah. That's how I build that, because often I'm the one who's getting a phone call, an introduction from a realtor saying, hey, listen, you need to speak with this guy and he'll educate you on what's happening. And then people who may not even meet me in person, I have to establish that trust. I have them say, you know what? This is the guy. Okay, I'll go with him because the bank never even told me that. And now I have a better strategy I didn't even know I could deploy.
Yeah.
Right.
Yeah.
And that's really all it is. But it's a matter of that personality and meshing and exemplifying for the client that, I'm here to help and it's to your benefit.
And I think also the process of it. I mean, I really feel like, does the bank tell them that they're actually not really pre-approved? Right? Like, does the bank really walk through with them and have them understand, like, we actually won't give you the final rate till we see what house you're buying, right?
No, they will. The bank will pre-approve them, but it's weird because it will pre-approve them with caveats. I had somebody who said to me, I got pre-approved with a bank and they wrote me a letter. Okay. And even then banks use these gimmicks and they say, do you have a letter? We'll give you a certificate with a shiny stamp on it. And people get like so excited about this stuff.
Yeah.
But this woman, she said, I was pre-approved, and she's coming to me after, and she said, but then I bought the house and now we're firm, and that same bank who gave me the pre-approval letter, and I'm within everything they told me to be within, is telling me I can't, they can't lend to me now because I'm still on probation for work. And she told them that that she had just started her job.
Yeah.
So they knew that. And that was the first thing I said. I said, did you tell them that?
Yeah.
And she said, yes. But now I said, is there fine print on this letter? She said, yeah. And like in the fine print, I said, send it to me. It says you must not be on probation. But the bank doesn't care. They could have done right by this person and just said, look, just FYI, that this is the scenario you're going to go into, or have a condition, or you're going to have to do something. Instead, the bank doesn't care. They're not liable here. If they issue you a pre-approval, they do not have to fund you. Pre-approvals are just saying you're qualified based on certain broad terms, but once you have a live deal, we're actually going to have to scrutinize it and give you real conditions to meet. And so, sometimes, unfortunately, I think it should be made illegal because those people are put in bad situations, but banks are really just there to build leads. And sometimes those leads don't work out and it's not the bank's problem.
No, but it's very true, right? I mean, if, again, this deal that I was doing, it has tenants in it. Now, they had a good mortgage broker. I understand the process. They had good people surrounding them. But if they had just walked into a bank, would they have had that conversation? Yeah. Like, we can't give you the mortgage if it looks like an investment property. I mean, and one thing you should also know is mortgage brokers, the really good ones like Ari, for example, have the relationships high up in the bank. So, you need to be working with someone who's very well connected, because then they're, my favorite word, exceptions to all of it. Yes. The guy sitting behind the counter in TD Bank isn't making a call for you.
Well, put yourself in that person's
because he doesn't
shoes.
care. Like, I'm sorry, I'm not throwing TD, RBC, doesn't matter. Any bank, they are an hourly, salaried, even employee who is filling out paperwork and is told what to do. And if it goes south, they're just going to be like, "Oh, I'm really sorry. Yeah, no, we can't do that."
Well, think of this two ways. Everybody should put themselves in that person's position, in the banker's position, this employee, right? If you have unlimited people walking in daily to throw their business at you, and you're getting paid a base salary with a bonus, and you have to make a quota, okay? So you're going to have to make a quota, hitting a certain amount of sales to sell the bank's product. Yeah. You want to close everybody. You make your quota, you get bonuses. Yeah. But at the end of the day, if you're that person at the bank getting the salary, are you really going to take on a complicated file and take it as your personal mission to be creative, to figure out, how do I make this work for this complex situation? When really you're like, I don't really care, because I'd rather just say I can't do it and tell the person, no, you're not going to get it done here, because I don't want to have to burn my brain up thinking about this, when really I'd rather just let somebody walk in with a home run, 5 minutes after you leave. Yeah. So oftentimes I have people who say, I'm with the same bank. This bank told me I can't do it. And I'm redoing the work for that bank to say, no, they just don't know how to do it at the same bank. And I'm redoing the work for them.
I feel like we could have an episode on that, but we are out of time. Thank you very much.
Thank you for having me.
So if anybody would like to reach out and get in touch with you, where can they find you, Ari?
So I have a website. It's admortgage.ca. And I also have an office at Lawrence Plaza at Bathurst and Lawrence. You can't miss the sign. It's just above Scotiabank. Yes, in Lawrence Plaza. And so if you're at UB's, if you're at UB, hit me up for a pea soup or a Greek or a coffee. I'm around.
I love it. Thank you so much.
Thanks, Rachel.
Thanks.